the market had kind of paused, and then there was quite a strong July, August of what I would call catch-up sales. There was sort of a lot of off-market sales that actually happened without going into campaign, where there was a sort of willing buyer, willing seller, and we actually sold farms as going concerns, and I know we weren't the only one. So I think there was a bit of a COVID effect last year, but certainly it's, it is quite a bit back on the same time last year. So that trend that we're talking about of fewer sales but the value's holding up is as much apparent in August as it is for the last 12 months.
Yeah, it seems to be the trend, that's for sure. So then we need to look at, the outlook, in particular for dairy farm sales for this season and beyond. What do you reckon?
Well, if we look at where we are as of today, we're tracking, and this year's almost bang on same time last year, is about 260 sales a year of dairy farms on the open market, and for about 1.4 billion. So it's about a third. The dairy market is about a third of the market. It's only 266 sales. So it is the big end of town when it comes to the larger valuations and the properties that are selling, and it's probably no surprise that it's worth 21.5 odd billion in export receipts. So I think what I would say, if you look back at the last 5 years and you look at all the challenges that have beset the dairy industry, I think, it clouds the fact that it's actually $5 billion in export earnings up on where it was in 2018. And so, people kind of lose sight of the fact of just the contribution. It was already by far and away the largest contributor to export receipts, but it's gone again. And to put $5 billion into context, because it's easy to rattle off big numbers, but the entire forestry sector is about $6 billion.
Right, well, there you go.
And that's, and then also it was the lead contributor. And importantly, production over that entire period has been flat. Like, there's been some small unders and overs, but that hasn't come off the back of record. In fact, there's very strong arguments to say with way, some would say the current policy settings are looking to sort of strangle dairy production, is that, there is no question that, it hasn't come off the back of increased production. And so there's been a lot of efficiencies on farm. There's been huge investment in compliance processes. There's been a massive requirement to adopt a whole new raft of policy settings. But against all of that, the returns are very good. So, look, forward of today, I think the first thing I would say is that those who have invested in dairy farms have done well out of it. We were talking about this back in 2017-18 about the fact that we saw real value in dairy farm systems, and we really felt, while there's only about 100 odd sales going on at that time, that there was enormous upside. Well, we've gone from about 38,000 a hectare back in 2017 to about 42,000 a hectare. But through the dip there, 18-19, it dropped right back to about 32,000 a hectare. So anybody, there's been probably about a $10,000 hectare uplift on same farms in the last 3 to 4 years. So, and that's just on the capital story. The actually, I think, most interesting thing is that the payout has been increasing year on year. And while we're seeing increases in the valuation of the land, I wouldn't attribute it all to payout. I think it has much more to do with some liquidity in the marketing, banking support, and I think more conviction around meeting the requirements and all the environmental policy settings that have beset the industry and which they've adapted to. So I think the real question is, what about the next 5 years? Do we see as much growth in dairy land? And if we were investing today, and there's a lot of chat about the commodity cycle for next year, but when I analyse it, I don't see the payout as the determinant of value 5 years forward to today.
Okay.
I think it has much more to do with government policy settings, and that tends to really affect confidence. And the fact that I think, come such a long way with that in such a short period of time, there's more to be done. But if you look at the investment that's been made on farm with compliance, it's massive. So you look at that, and then look at internationally that we're not the only large-scale dairy producing country that's got its production constrained and having to face into a whole heap of challenges around how we meet, the requirements of a global policy settings around environment, et cetera, et cetera. Safe to say, demand is constrained nationally and internationally in terms of forward production, but global demand for whole milk as a food is increasing, and you've got fewer and fewer dairy farms in New Zealand. So you've got, and if you're really looking at the big picture, these issues, everybody looks at the Ukraine situation and thinks it's all to do with some short-term aberration in terms of supply chain and constraints on grain, etc., etc. I don't know. There's just not a lot of precedent out there for those type of conflicts being resolved quickly. And then secondly, and probably most importantly, is that we haven't figured out how we're going to transition from fossil fuels to renewable energy anytime shortly. And so, but there's no strategy for dealing with the demand for oil production has been curtailed. So the inflationary pressures on supply chains and what this transition from fossil fuels to renewable energy over the next 10 years, strategically, you'd have to say that, a finite resource and on our dairy land is typically on our best soils. It has to be a good play. And if these inflation forecasts do pan out, it could be quite scary. Just, look, quick little history lesson, Dom. You go back to 76 to 86, those 10 years after the oil shocks, which, those kind of pale into, the OPEC oil shocks, I'm not quite sure, but the current threats at the moment seem more significant than that. But, the food index averaged 18.4% per annum inflation for 10 years between 76 and 86.
Right,
now, I'm not
wow.
predicting that. But what I am saying is there seems to be a lot more bearish views out there for next year around inflation than there are positive ones. And obviously once in dealing with those issues, there's not a lot of, maybe repeat the same thing, there's not a lot of precedent for sorting them out quickly because it's structural. So, look, owning a land asset that is very much a fixed resource and a world that has increasing demand for food on constrained supply, history would, investing in the quality dairy farm asset would pay a good dividend, both from a cash flow and also capital growth. You've
convinced me. Right, it's invest in a dairy farm time, I feel. Conrad Wilkshire from Property Brokers, as always. Great to get your insight into the rural real estate market and where things might be heading. Very much appreciate it. Thank you so much.
No problems.